Hello guys and girls, welcome back to Forex Clubhouse and Happy New Year to you. If you have been with us before, you know we have witnessed remarkable market movements together. Just this December alone, after doing analysis here on this same channel, we were able to see these opportunities together on these two pairs, and through them we were able to grow from a $2,000 account to $40,000 account with just two trades alone. Of course, the call to take these trades was given on the Telegram group, whose link can be found in the description below. All that I can say, guys and girls, is 2024 is going to be an exceptional year if you continue to subscribe this channel and follow all of my videos that I will be uploading. Without further delay, let's dive deeper into this video where we'll be discussing the trading strategy that you must be using in order to succeed in and kickstart this exceptional year on a winning note. Guys and girls, before we dive deeper into this trading strategy video, please allow me to remind you on how the market moves, because once you know how the market moves, then it is very possible for you to be able to predict its next movement that it's going to make. Now, I know that you already know that the market moves in series of lower lows and lower highs for the case of a downtrend movement like this, but a lot of you make a mistake of thinking that once the market retests to this broken structure, it is where you should enter the trades right away. Now, in this video, I'm going to show you on how to properly enter your trades, even though you know how the market moves in series of lower lows and lower highs for the case of a downtrend. Now, for those who are completely beginner, let me just draw here on how the market should move when it is on an uptrend movement. So on an uptrend movement, the market always moves in series of lower lows and lower highs. Now, guys and girls, there is this common mistake that a lot of traders they are making when they come to trade. They do not know to how properly to identify proper higher highs and higher lows when they have already identified their so-called trade. How did so? Let me go to the real life example, the real chart, so that you can see what I mean. Now, a lot of people, when they already identify, for this case, we are on volatility 10-1S index and the market is on an uptrend. Okay, you may find a person identifying this level right here as his or her lower low of this trade. So if I may ask you, is this actually a higher low of this uptrend movement? That's probably not an answer, because in order for a new higher high or a new higher low to be formed, the market must first break the previous broken structure. So you can see right here on this trade, this market is on an uptrend. The market did come right here to form the new higher high. It retested, it came here to form a new higher high, it retested this level. The market came, but it did not break this structure right here, and it came down right here. So this cannot be termed as a higher low of this uptrend movement. Why? Because the market did not break the previous structure right here. So most of the traders will say, okay, the market is making new higher low right here. Let me mark this area as my new higher low, and let me trade it in the future. You can see what the market did right here. Again, it did not respect this, because this is actually not a higher low of this uptrend movement. A new higher low or a new higher high is formed unless the market breaks the previous broken structure or the previous level that the market did respect. For this case, it is this level right here. So the proper way on traders on how we could have identified proper higher highs and higher lows for you to trade on this market, or on how to predict its next market movement, it's first by identifying the previous broken structures. You can see right here the market did break this structure. It came to retest this level right here. It failed to break this structure. So what the market was doing right here, it was forming some kind of a corrective phase. The market broke this structure actually. So this is a new higher high of this uptrend movement. The market came to retest this previous higher low of this uptrend movement, and as you can see, it actually respected. Now, there are many ways on how you can trade once you have identified the market moving in an uptrend direction. This is the common way that the market has to retest this broken previous level right here in order for it to continue with its direction. But most of the times the market rarely does this. So most of the time the market comes to retest to as high as this level right here, to as high as this level right here. For this case, it's a downtrend market. The market, you can see it came to retest this previous lower high of a downtrend movement. And for the case of an uptrend movement, you can see the market may fail to retest this broken structure and may come to retest to as low to as this level right here. This does not necessarily mean if the market fails to to respect this level and comes to as low as this level, this does not necessarily mean that this market has broken this uptrend movement. But unless this market right here, it breaks this level with full body candlesticks, and mind you, full body candlesticks are not just some random weak rejections, then just know that this uptrend movement is already broken. But for the case right here, you can see the market, we are on the 1 hour time frame. You can see the market did retest right here, beautifully forming some kind of tweezer bottoms right here, I think, and it's actually prayed out. So let us see on how we could have got this movement or this entry on the lower time frames, because we as day traders, we take normally entries on the 50-minute chart. Why? Because we need to open as many positions as possible while having the most possible least stop loss that we can find while taking those entries, because we are day traders. So the tighter the stop loss, the more the positions that you should open. But if you just enter blindly on the higher time frame, your stop loss will be very huge and you'll be forced to open very few positions. So let us go to the 30-minute time frame first before we go to the 50-minute time frame first. So on the 30-minute time frame, we can see right here that this market, after it came to this level, it did not give us any clear conference that we should enter into this trade. So what to do is you should observe how the market previously was moving, and we can see right here this market was previously moving on a minor short-term downtrend movement. And since we know how the downtrend market movements is, since we know how the downtrend market moves, the market always moves in series of lower lows and lower highs. So we can see after we got a change of the market structure on this regular here, I said for a downtrend market to be official over, the previous lower high has to be broken. And you can see here the market did break this level right here, and this signified that this short-term downtrend movement is officially ended, and we should look for buys, and we should combine it with our conferences on a higher time frame that the market is on this level right here, that we should enter for buy trades right here. And you can see the market, after breaking this structure, it came to retest to this level right here, forming some kind of candlesticks, with multiple weak rejections right here. All this signifying us that we should enter buy trades while having our stop loss to as low as this level right here. You can see how we got this entry, very tight stop loss. So most of the people are asking me when they see my trade, they will be like, sir, how can you open so many positions such as those without blowing your account? And this is how I do it. I always enter my trades on the lower time frame while having many positions with very tight stop loss like here. But if you were to enter on the higher time frame, this could have been your stop loss. Your logical stop loss could be on this area, your logical stop loss. And you can see that's just it makes sense for swing traders, but for we as day traders, this is the possible approach we should make. Guys and girls, if you're confused, just subscribe to this channel, and I will be uploading videos regularly until I make sure that 2024 is a year that you will turn into be a profitable trader. If you want to enter into my Telegram group for free, the link can be found in the description below. So guys and girls, see you in the next video. Bye bye.